Adit, we know that you've been in back-to-back meetings, so thanks very much for taking the time out. I want to understand from you, quick commerce companies have been really painting the town red, green, and perhaps with all sorts of colors, and my colleague Asta was presenting, some interesting trends. I want to understand from you, what are the demand trends that you've witnessed during Holi? Interestingly, you also had sales of juices going up in the evening along with mixers and laundry detergents. What really explains that? And do throw some light on the sales numbers that have been achieved during Holi this year versus last year.
Absolutely, Sumita. Look, I think the events as a use case on quick commerce is well established now. And what people are realizing is that getting things delivered in 10 minutes perfectly suits religious festivals, holidays, parties, and family gatherings. And that use case, the advantage of it is we're able to get deep growth and retention benefits, and we're able to do it at limited to no cost, because not only do we see a traffic spike, but if you pick the right assortment and you're able to serve a specific use case on that day, for example, pitchkaris on Holi, it ends up just being a massive conversion driver. And the best part about that is that you see a spike in first-time buyers. You see a spike in buyers that haven't purchased in a long time. So the platform sees a 40-50% increase on those buyers week on week. And the retention of those customers after the event is much higher. And so it just becomes a lever to keep expanding our buyer base. How many new buyers are we getting? How many old buyers are we reactivating? And as a result of that, I think the events is something that we focus on deeply. You mentioned Holi, for example. Holi is a event that got us our highest ever orders per day. We did over 600,000 orders per day over the Holi weekend, and that was a big win for us. And when we looked at even the types of SKUs that sold, we got surprised, right? We saw a 3 to 5x spike in t-shirts, white t-shirts, people that got Holi color all over them and needed a new fresh t-shirt or bought before Holi. We saw a spike in juices and mixers in the evening, almost a 2x spike of juices and mixers, primarily because of presumably evening parties after sort of Holi festivities in the morning and the afternoon were done. And we also saw even in other festivals, for example Mahashivratri, right, regional festival, big spike in puja flowers, big spike in other religious SKUs that we have on the platform. For example, Christmas as well, right? Christmas was a massive day for us a couple of months ago. World Cup matches, the World Cup final was the first time that we breached 500,000 orders on a single day. So we are we reached 400,000 orders that day, and then we've grown to now over 600,000 orders on Holi weekend. So all of these things, it becomes a growth driver, it becomes a buyer base expansion driver, and we see the assortment that spikes keeps surprising us day in and day out. So events is exciting for us.
Aditi, throwing up some very interesting numbers, a 3 to 5x spike as far as white t-shirts demand is concerned. In fact, over 6,000 orders you're mentioning, and you rightly said that special occasions are indeed turning out to be a huge opportunity for brands in the quick commerce space. But if you could give us a sense of the kind of contribution that these special events and days are making to your overall sales, and how much has the average order value gone up by?
Got it. So, Sumita, what we're targeting 30% of GMV coming from event-led days. So there are not just organic events. Obviously, organic events, Eid, Holi, Diwali, events along those lines, but there are also platform-created events. So, for example, at the beginning of every month, we do a week-long BIG sale, biggest Indian grocery sale is what we call it, and it gives customers access to atta, rice, dal, beginning of the month purchases at good prices, right? And we work with our brand partners to execute those events. And so platform created events, and even for example today we are launching toys. If you open up the Zepto app, you'll see toy category launch formally, and you'll see a big widget on the app and a little bit of an event there where we've introduced new assortment and we've got new prices and great deals for customers as well on day one, right? So it's opening day for us on toys as a category. And if you look at all these events combined, right, platform created events and organic events, we're aiming for in 2 quarters 30% of GMV to come from events, and we see anywhere between 15 to 20% growth week on week during event days. So if I look at this on a base of around 10,000 crores in sales, which is where Zepto is right now, growing rapidly, At 10,000 crores in sales, 30% of GMV is 3,000 crores. If we get a 15-20% bump on that, that's anywhere between 450 to 600 crores of incremental sales that are coming because of events-led execution and planning on our end. So we're getting a couple hundred crores of sales for shareholders, and that is a big lever. I mean, not many things can give you a few hundred crores of incremental top line just like that. So that's and the best part is not only is it accretive to growth, but it's also accretive to profitability. Categories like pitchkaris, for example, yesterday, and even festive SKUs, right, are, to be very candid, pretty high margin, right? And they're much higher margin than most sort of base grocery spends. And customers have a higher willingness to pay, especially for impulse purchases during those days. And so we see profitability spike as well in those days, and it actually adds up to our overall month level P&L, where we see, not just a few basis points, actually, 10 to 20 bips, if not hopefully more when we hit a higher penetration of profitability improvement that comes from events.
Right, Aadit, and of course, credit goes to you and quick commerce companies on how you really created these branded days, capitalized on other events, festivals, and special days. Now, speaking of the quick commerce phenomena, it's largely been a big city trend where people like me don't want to go out, don't want to step out, and are ready to pay extra for convenience sake. But what are some city-specific trends in terms of metros versus small cities, and what are the growth projections then from each of these geographies?
Yeah, so look, I think for us right now, similar to categories like food delivery and ride sharing and other high frequency consumer internet platforms, what we're thinking of right now is a little over the majority of our volume will come from metros, and there's anyway a deep Pareto distribution in metro cities, not even in terms of customers, but in terms of value spent on grocery and fast moving goods like personal care, beauty and cosmetics, categories like obviously toys, which is what we're launching today, meat and seafood, fresh fruits and vegetables. So the power law or the Pareto distribution of sales is definitely in metros. Actually, is what we're projecting is going to come from metros. In terms of tier 2 and tier 3 cities, about 40 cities in the country contribute to a large chunk, almost a majority of grocery spent, about between 40-ish to 50%, depending on the report that you look at. So 40 cities is really where the whole game is. When you look at the tens of thousands of cities, towns, and other settlements in India, right, you're in a place where why would, for our category to become massive, what you said, $45 billion of combined top line, which would take us to the largest grocery outcome in the country, right? Multiple times bigger than even DMart. At that point, we look at this space and say, okay, even if we need to achieve that $45 billion in outcome, why do we need to go to rural Jharkhand or rural Rajasthan? Right? Obviously, I'm sure those are great markets, but the top 40 cities have a huge Pareto distribution of value. So let's just go all in and focus on cracking those markets, not just on growth, but on profitability, right? So look, I think that there's a Pareto the data suggests to a deep Pareto distribution in the top 40 cities in the country out of tens of thousands of cities in terms of value spent. And my, intuition looking at the business right now is that Pareto distribution is even more intense when you look at it not from a sales scale perspective, but when you look at it from a profit pool perspective. So if let's say hypothetically 40% of overall grocery is bought just in 40 cities, after tens of thousands of cities, I'm sure 70% of the profitability would be in those top 40 cities. So yeah, that's our philosophy. And I think, city number 10 to 40 is on the horizon. Some of it this year and definitely over 2025 and 2026.
All right, so 70% of profitability will come from the top 40 cities. That's a big statement coming from you. But Aadit, I have to speak to you about the other issue that's brewing in the quick commerce space, which is that of high platform fee recently, carriage fees as well, which a lot of brands are undertaking in order to achieve profitability. I want to understand from you, how do you look at these charges when you're hiking these charges and the impact that they'll have on your overall profitability, and how soon are you looking at turning profitable? And another question on from a consumer lens, from a consumer point of view, will we see further hikes as far as these carriage charges or platform charges are concerned?
Yeah, absolutely. So to give you a sense, actually, month on month, our delivery fees have come down. And that's because we launched Zepto Pass. And Zepto Pass gives customers unlimited free delivery for a relatively low subscription price, right? 90% of customers are seeing subscription anywhere between 19 rupees and 39 rupees. Obviously, there are very high spend customers like me that have got charged a little bit more. But 1939 rupees right now is what Zepto Pass is priced at, and unlimited free delivery. On top of that, you're getting incredible prices, right? If you look at the pricing of products on Zepto Pass, it's equivalent to even, or not too far. I wouldn't say equivalent. We still have some more work to do to get to equivalency, but we're not too far even from best in class discount grocers in the offline world, right? And so we're pushing hard on that. Price and delivery fees as a value proposition. Zepto Pass today is already at north of 2 million subscribers. Almost a majority of our orders are getting contributed to from Zepto Pass customers. So free delivery is very much on the cards. I mean, yes, we make all these small optimizations. You mentioned a platform fee, and it's giving us obviously incremental profitability. But what we're most excited about is how do we actually get to profitability? And we're actually quite close to it right now, getting to profitability not with customer unfriendly actions like increasing delivery fees. That's why we launched Zepto Pass, but getting to profitability instead with customer friendly actions or customer neutral actions. So for example, supply chain excellence, right? Whether it's throughput per square foot in our mother hubs, whether it's line haul utilization, whether it's manpower productivity in our stores, whether it's wastage management because of forecasting excellence, whether it's last mile and orders per hour per delivery partner that we're able to drive. All of these metrics are metrics that we can move to reduce costs and do it in a customer neutral or customer friendly way. So that's one big ticket line item of profitability, pure supply chain, Six Sigma style operating excellence. That's one. The second part on assortment expansion, increasing AOVs and margins as a result of that. And most importantly, our advertising business. Today we're generating hundreds of crores of advertising revenue and growing rapidly, growing 150% plus year on year. By next year, we could get to 1,000 crores in ad revenue if we're able to execute it. And that revenue is straight to bottom line, helps profitability meaningfully, and again, is not harmful to customers. So those are the big ticket items that we're focusing on. That's why if you look at our journey right now, despite launching Zepto Pass, we're on track to hit EBITDA positive in 4 to 5 months if we continue on this trajectory. So we should be so if I take a step back and I look at the overall trajectory of the company, we launched 29 months ago. Even 4 months out, we'll have effectively gone from zero to almost $1.5 billion in sales, EBITDA positive in less than 36 months. And we've done that with a fraction of the capital that most consumer internet companies have taken to get to the scale of $1 billion in sales. So we think that this is best in class return on equity accretive execution. And this is going to be a generational outcome if we are able to keep our eye on the ball for the next decade.
All right, so Zepto looking at becoming EBITDA positive in less than 36 months. That indeed is an ambitious target, one that can surely be achieved by the likes, by a company like yourself. But are there lots of other developments also happening in the quick commerce space? And I'm alluding to the speculated entry of Flipkart in the space. Also, Zomato claiming that the quick service business will be bigger than their core food delivery business. From the time when there were many doubters, of course, doubting and expressing skepticism on the viability of quick commerce as a business domain, quick commerce sector indeed has come a long way. Do you really think that 2024 is the year when quick commerce will have its moment in the sun? And secondly, and most importantly, I want to understand how you're looking at Flipkart's entry into this space.
We actually look at it like a big validation of the space, like you mentioned, right? These were the folks that were writing obituaries about quick commerce not too long ago, like 18 months ago. It's been, only 18 months earlier where this was not taken seriously, not just in e-commerce but just generally in tech in India, right? And so looking at a player like Flipkart, well-established business that is getting into the space, is a huge validation. And I think anyone who is doubting this business now can come in and say that even the people that were writing obituaries about this business 18 months ago are now actually changing tack and realizing, wow, not only is this going to be an Amazon Flipkart level outcome in terms of scale, billions of dollars in sales this quickly, but it's going to be, right now it's highly, overperformed on profitability. I mean, we're going to get to EBITDA positive faster than food delivery, faster than ride sharing, faster than core e-commerce, faster than, high TAM fintech, right? Pretty much every category of consumer internet that's high TAM or high market opportunity. This is the fastest category that's hit profitability and still growing. Today we're growing well over 100% plus year on year on a base of thousands of crores in sales. So it's a quality outcome, and I think that it's a great validation of the space. In terms of your first question, which is do we think quick commerce is going to see its day in the sun in 2024? I mean, absolutely. We're on track both on profitability and on growth. And what I leave you with, Sumita, is that DMart, I keep referencing them, huge amount of respect, probably one of the best executed independent businesses in Indian corporate history. And if you look at DMart, they were started before I was born, right? It's a $30 billion company. And despite being such a well-executed $30 billion company that's that old, they are only today 5x our size in sales, and we are growing 2 to 3x every year. And they're growing 10 to 15% year on year adjusted for inflation. And we are just in month 29. So the way that we look at this, in the next 24 to 36 months, we're going to be at their doorstep in terms of scale. And I don't think it's a competition. I think both of us are serving different categories and different use cases. But really, this business is quite likely to be bigger than DMart in the next 24 months.
Well, we hope so too, Aadit. In fact, indeed, like you say, that big validation of the quick commerce space due to the purported entry of Flipkart. The space, like you said, was not really taken seriously, but is now overperforming. One final question before we let you go. Do you plan to enter the public markets anytime soon, considering that there's been a lot of interest by smaller companies and even angels? And if yes, then how soon?
I know, I was joking with our board, it's 29-month-old company. I don't think there's any other company that's 2 years old that people ask when you're going public to. So I think it's a good sign. It's a humbling sign. And look, we have publicly stated ambitions of building in public and creating value for shareholders in India. We're very excited about it. And I think the objective is, I think we're going to be going public in the next 18 to 24 months. We're working towards it. Obviously, there are multiple nuances, not just on externalities and the market, but even on our readiness for an IPO as a fairly young company. We're working pretty hard towards. But the idea would be by end of 25, early 26 to go public. That's what we've worked towards for quite some time, and hopefully it looks like things play out, and as things stand right now, it's on track.